I'm Tommy Petzel, by the way, and thank you guys for being here again. The last speaker today will be Judd Johnson. We're going to talk about what's happening in the world of American hardwoods. It's been quite an extraordinary year, and looks like quite a year coming up for us here too. So who better to ask what's going to be going on than the guys at the Hardwood Market Report. They've been a trusted source since 1922, and they continue to provide benchmark pricing and market commentary for the hardwood lumber industry. So joining us today to provide a close-up look at American hardwood industrial markets, past, present, and future, is the Hardwood Market Report editor, Judd Johnson. Thanks, Judd.
Thank you very much.
Good to see you.
Good to see you. Thank you.
Thank you.
All right, I want to thank Josh and Jake for their presentation. They made the hardwood marketplace seem a whole lot less scary than what it seems to have been. Made my job easier anyway. Well, good afternoon. It's been a long time since this group has been able to gather together for a national conference. And I want to say thank you very much for letting me be a part of it. This is a special group for me. So welcome back. The talk I'm going to do today, it's inescapable that we're going to talk about somewhere in there about the COVID-19 pandemic. But it's also important that we talk about business before the pandemic, before we really get into the meat of what happened, the results from that. And then what I'd like to do is to take a look at what's next, and not to forecast, but to just forward think just a little bit. But before we get into the weeds of the conversation, there are two basic ideas in this presentation I'd like you to keep in mind. The first one is supply as a product of demand. And the second one is price and price movement result from the supply-demand relationship. And what you might think about these ideas, in the 1970s, Doritos had a tagline that said, "Munch all you want, we'll make more." And they didn't say it, but if we munched less, they would have made less too. So production is all about the munch more, make more, much less, make less. The other idea that price and price movement result from the supply-demand relationship. Think about a Girl Scout troop setting up cookie sales right outside a meeting hall for Weight Watchers. And when that meeting lets out, what do you think happens to the price of that last box of Thin Mints that they have? So that's the thought there. A lot of what I'll share with you today is in this graph, and I know when you look at it, it's totally self-explanatory, but if you'll indulge me, I'll tell you that the blue line that you see is Eastern U.S. hardwood production, annual production. The red line that you see measures the percentage change in production from one year to the next. And if you draw your attention to the very left-hand side, you see a very deep decrease in sawmill production. That was from the Great Recession. If you draw your attention to the far right side and see another deep decrease in production, that was from the COVID pandemic. The common thread between those two, these were global events, and they impacted all of your hardwood markets. Now on to this next slide. Okay, it's actually the same slide. But now what I want you to do is look at 2017 and 2018, 2019. And we're going to call these the trade war years because, well, they were. There was a 1.5% and a 7.2% decreases for 2018, 2019. Now, for full disclosure, the production decreases in 2018 didn't start until the second half. Matter of fact, pretty far into the second half of 2018. So the impact was actually pretty dramatic when it happened. But when you spread that over 12 months, it was just a 1.5%. When you add these 2 years together and compare that to 2017, it was an 8.6% decrease in Eastern U.S. hardwood sawmill production. There's no question that an 8.6% drop in production is a big number. It's a big hit for any kind of business to lose that much production. But it certainly wasn't as crippling as what we see with the Great Recession and COVID-19. In fact, the real critical issues about 2018 to 2019 really wasn't about demand, overall demand decreasing or production decreasing. It was about declining values of key grade lumber items. And here we see prices for first and seconds and number one common ash, cherry, and red oak plummeting below the tariff percentages that were levied against each species by China. That's 20% for ash and cherry and 25% for red oak. This is where the question comes to my mind about China's economy at that time. If the downturn in U.S. hardwood lumber imports from China, by China, was just a tariff issue, which is money, well, we see here that you already paid for that tariff with lower prices. But yet the volume of lumber imported from the U.S. by China decreased in 2018 and again in 2019. But the pricing downturn in China wasn't the full effect. The full effect was it spilled over into other markets when U.S. exporters had to pivot from China and try to sell the lumber that they had, lumber that they were producing into other markets. Clearly it drug down overall prices there too, because there was no other market that size that could take that much volume of the same items that have been going into China. So we kind of went into a crisis management mode. There was elevated sales competition. Additionally, higher grade lumber was sold into markets that use lower grade quality lumber as a base for the raw materials. Notably, number one common and FAS red oak sold to oak strip flooring manufacturers, first at prices that were modestly higher than 2A, but over time they dropped down to no more than 2A. Even then, flooring manufacturers eventually didn't need that extra volume, so there was no more incentive for them to pay those higher prices. Mills produced more industrial products, less grade lumber from the China-centric species. Mills and yards alike pivoted to other fast-drying species. The idea was to increase the throughput to try to reduce the processing costs, and hopefully that would minimize the decreases. And in fact, it did. One example that was given to me, this was someone that increased their production by using poplar, increased the throughput by 10%, and their revenues decreased 5%. And at that time in the marketplace, that was a great victory for them. These extreme circumstances that you're seeing here, and I just talked about, have led to two significant events or results that are defining the marketplace today. The first is substantial wealth was taken out of the supply side of the marketplace. Mills and yards used inventory and other assets just to stay in business. Again, there was only 8.6% drop in Eastern U.S. hardwood sawmill production from the end of 2017 through 19. But depending on the species makeup that sawmills had for logs and timber in their wood basket, or depending on how closely a business was tied to China and depended on China, the difference in revenue could have easily been 40% or more. Financial strains and shaking confidence in the market have made sawmills cautious about pressing hardwood lumber production higher. The second impact stemming from the China market downturn is this: supply began to correct. As we just talked about, sawmills produced less grade lumber from red oak, ash, and cherry logs during that time. And was pointed out, some of the number one common and first and seconds lumber that was produced was relegated to oak strip flooring manufacturers or other manufacturers that typically use lower quality lumber. Yards backed off from purchasing first and seconds and one common red oak, ash, and cherry at that time too. There was also a substantial amount of common and better lumber that was left on the sides of industrial timbers, crossties. Then there are sawmills that turn production to hardwood sawmills that turn their production to softwoods. Now, not all sawmills did that, and the ones that didn't saw pine or other softwoods every day or necessarily every week. But the time that they spent processing softwoods was lost production for hardwoods. So collectively, less FAS and one common hardwood lumber was produced and processed, and inventories began to contract. This is our stepping off point to the year 2020. At the time, industrial markets were performing well. Grade lumber inventories were beginning to decrease, and they were becoming a little closer balanced with demand. Downward price pressures were starting to ease for several key lumber items. There was a growing sense of business with China was improving. China's economy was expanding again, and in-country inventories at that time were down some. Eastern U.S. hardwood sawmill production increased actually the first 2 months of 2020 over January and February 2019. And I'll revert back to the Doritos thing, much more, make more. By mid-February, China's government announced it would roll back additional tariffs on U.S. hardwoods for a year. The supply side of the U.S. hardwood lumber market had been financially damaged and during the previous year and a half, but finally, we had a sense of confidence. Things were turning a bit. And that confidence lasted maybe 2 weeks. I personally mistakenly looked at China's coronavirus epidemic as being a China thing. And at this time, we realized that it was a world pandemic. So let's just say that things changed. But we can also acknowledge that the things have vastly improved since the epic downfall in business that we experienced between March and June of this past year. As we're all here today and people that are involved virtually, we have a sense, and it's a growing sense, that our business is recovering, things are recovering, and there's an opportunity for growth in our business. And I'd like to explore that idea just a little bit. When we consider the forces that drive business for us, and really for any business, the first and foremost thing is the economy. The economy has to be healthy for our business to be healthy. The U.S. just completed a historic 10 consecutive years of economic expansion. The COVID-19 pushed back our growth to a minus 3.5% last year. 3.5%, whether it's increase or decrease, is a big number for GDP. But when I think about 2020 and the economy, 3.5% doesn't sound right. That looks more like what I think about COVID's impact on our economy. The U.S. endured an economic swing of nearly 65% over the course of 2 consecutive quarters. These drastic changes in successive quarters is unmatched in my lifetime. And the extreme downturn and then the subsequent surge in the U.S. economy and economies around the world created both supply shocks and demand shocks. And right now we're in a period that I would call we're experiencing aftershocks. Of course, the U.S. hardwood business isn't isolated. This is a world market. How well the rest of the world began recovering economically from the pandemic is important. Not surprisingly, China was the first country to be infected with coronavirus, this strain of coronavirus. It was also the first one to suffer and recover from it economically. This table shows worldwide economic output is expected to grow 5.5% this year, 4.2% next year. Of note, this outlook projects the next 2 years of growth for China at 8.1%, 5.6%, India at 11.5% and 6.8%, and ASEAN at 5.2% and 6%. And I mentioned India, not because India is a great market. There's a lot of hope for that, and we don't know what it'll develop into, but you can't ignore over 1 billion people with an economy expanding double digit. The U.S. economy is projected to grow 5.1%, 2.5% in 21 and 22 respectively. So given this information we've just seen, we recognize the economy is recovering and it's well on its way. The next key influence for U.S. hardwood lumber is residential construction, and specifically single-family construction. The reason, of course, is that single-family housing tends to be larger in size and includes more and higher cost fittings, finishes, and furnishings than multifamily housing does. This points to the obvious connection between grade lumber markets and the housing market, but we can't overlook the impact of housing on industrial markets either, for packaging, pallet material, shipping, shingles, anything that goes with housing. Our entire marketplace is influenced by this. This graph on U.S. housing construction, I think it includes the full data series that Census has online up until 2020. If you look at it, there's an incredible amount of information here, but what I'd like you to do for right now is, again, focus to the right of it. And there are a few points I just want to mention. First, the obvious thing, single-family housing starts are increasing. The starts are just now beginning to cross over 1 million units consistently. That's closer to, but is not quite to what economists have said static demand is in the U.S. for single-family housing. Static demand is supposed to be at 1.1 million units. It was prior to the Great Recession anyway. Insufficient construction of new houses over this 13-year period has contributed to current severe housing shortages in the United States. So housing construction now is being propelled by these shortages, plus a recovering economy. This is what our housing supply looks like using a different matrix. According to the National Association of Realtors, they use a 6-month supply to delineate a buyer's market from seller's market. I'd like you to take a look at this one too. Again, all the way to the right side. This is ending January. And ending January, there were 306,000 new single-family housing units in inventory. That number equaled 4.4 months supply based on the January rate of sales. However, 81,000 units, or 26.5% of this inventory, hadn't even been started. And if you look at the bottom right-hand side of this graph, you'll see that the red line are the units that have not been started. There were more units counted as inventory that had not been started than there were units that were completed. And this raises a question in my mind: at what part of your business can you count something as an asset that doesn't exist? So thinking about that, I thought it made more sense to let's take out the ghost inventory and just count what was tangible inventory. So when we do that, there was actually just a 3.2 month supply of that. Well, since I did this graph just the other day, February's numbers came in, 310,000 units in inventory, 28.1% that had not been started. And by the way, the Census Bureau says a house is considered started once you scratch the dirt. So the units that hadn't been started, not even a shovel of dirt's been moved on it. This is still one of my favorite graphs. This graph includes the inventory that's under construction that we showed in the previous slide, plus it includes units that had already been sold that are still under construction. The red line takes those numbers and it combines units that have been permitted and not started. And what this graph represents to me is the amount of construction work that's already in place to be completed. And with that, it also means that there's future demand for hardwood interior fittings, building materials, components, and furnishings. So if we divide the number of units in January, represented by the blue line, by January's rate of completions, there are 8.1 months of construction work in place and also demand for hardwood products. We do the same thing with the red line that has the units that are permitted but not started in there. We've got 9.6 months of construction work in place. Here we see single family housing construction kind of from a monetary standpoint. This is private investments in single family construction. The slide introduces remodeling, and remodeling may have as much and could have even more of an impact on demand for hardwood products, flooring, cabinets, furniture, than new construction does. The money for remodeling is for owner-occupied single-family housing. That's important. This isn't rental property that someone is fixing up a piece of property for the next tenant. These are people that are spending money on their houses for their own lifestyle, which makes it hardwood-centric. The record high, we just hit this in January, $244 billion on remodeling annualized. It wasn't long ago where we were less than 200 billion annually, and really not that long ago where we broke over 100 billion. This has been a substantial growth in the marketplace that's beneficial to hardwoods. Just for comparison, you see the blue bars. Investments in new single-family houses came in at $376 billion in January. And notably, that's the highest number for that since October 2006. And anytime we can tie housing construction back to 2004, 2006, that's a good thing. Housing sales are increasing, but because of limited supplies, it's prevented a rapid return to static demand levels. Home prices are increasing. And yes, higher costs for building materials are contributing to the increases. But I'd argue that the situation with housing, with the supply shortages, is more like that box of Thin Mints outside the Weight Watchers meeting. This image shows high end of the marketplace is driving the housing sales, which is beneficial to your business. Now, I want to summarize what we just covered so far. The primary factors influencing demand for U.S. hardwoods moving in a positive direction for recovery and growth. We could even go a step further and say right now, hardwood lumber business is pretty good. But in case you didn't notice, I didn't say much about the COVID pandemic, so I'd like to do that now. At mid-year 2020, the annual rate of hardwood lumber consumption, was tracking approximately 2 billion board feet less than 2019. All market sectors were affected. However, market recovery in the second half of 2020 pulled up the consumption for the full year about 1 billion board feet higher than we estimated for mid-year. This dramatic and abrupt downturn followed by a sharp rebound is very much like what we saw with the second quarter and third quarter GDP. Here's a little more detailed look at contraction and recovery. Each of the market groups that we see here consumed less volume in 2020 compared to 2019. But pay particularly close attention to the blue part of the bar, which is the industrial group. And it was downturned by the pallet industry specifically that probably had the greatest impact on sawmill production this past year than any other single market sector, maybe even more than the grade lumber groups combined. To break things down a little bit further, this is how the individual market sectors performed. The pallet industry contracted sharply, but made a strong recovery in the second half of the year. In fact, each major market sector recovered in the second half of the year from the first half downturn, except board road mat timbers. Here we see that Doritos example again, much less. Eastern U.S. hardwood sawmill production started off 2020 ahead of 2019 same month output. Obviously that changed. By May 2020, it posted the lowest annual rate of production, sawmill production, any month that Hardwood Market Report has ever recorded. Also beginning in May, Eastern U.S. hardwood sawmill production stayed below 5 billion board feet for 5 consecutive months. Again, that's another record. And for the year, Eastern hardwood sawmill production ended at a new record low. Here's the same data, just viewed a little bit differently. Production over the last 3 quarters of 2020 averaged just slightly more than 5 billion board feet. The key to this graph, in my mind, isn't just reduced volume, although that's important, but it's the number of successive months and the successive quarters where sawmill production was at such low levels. This isn't an exact number, but it's not far off to say for each quarter that we've had low sawmill production, that was a full cycle of sawing green lumber, turn it into dry lumber that the marketplace just didn't have. So when we look at this graph, to me, the supply void seems very clear. Again, more of the same type of data. A blue line is annual production. I wanted to show the quarterly data for 2020 to see how each quarter drug the cumulative number for 2020 down until we hit that record low. It's not as scary as cyber stuff, is it? This is Hardwood Markets Report's perspective of how supply and demand stacked up at the end of 2020. And just as a matter of explanation, the differences you see between supply and demand, that represents inventory change. Now, there are times when inventory expansion is necessary, particularly when you're coming from a downturn. That would be right now, one of those times. Also times when inventories need to contract. There can be a market event or an economic event that forces a downturn. We also have had times where there's a zealous mindset on sawmill production where we just produce too much. But regardless of the direction or the reason, inventory change can overshoot its boundaries. And usually when momentum sets in, up or down, it does cross over those boundaries. So here we are standing outside the Weight Watchers meeting again with that last box of cookies in our hand, which raises the question, what's happening with hardwood lumber? Well, we know what the answer is. Prices are going up and they're growing up substantially. So I'm going to ask you to focus your attention to the right of this graph, sort of ignore the things on the left for the time being, and we'll see that your prices are going up. This is what you're dealing with. This is what your customer is dealing with. So I've got a question in my mind that if you or your credit insurance provider went back in 2018 to 2020, mid 2018 to 20, and when prices went down, did you adjust down your credit limit to your customers? And if you did, now that we've got price inflation, what is that doing with you and your relationship with your customer? And what about with ash? Prices for this species have risen above their 25-year average during this market run-up. Hard maple prices are going vertical. Prices for 1 and 2A are above the 25-year average. FAS prices at a 25-year high, and it's still rising. We've got 25-year record high price for each grade published for soft maple in the Appalachian region. And I didn't check it for sure that if this is an absolute record high or not. But in my opinion, if it happened before later than 25 years ago, it really doesn't matter. Red oak prices are above their 25-year average, but at the midpoint of March, they're not at record highs. Now, when I look at this graph and I use the word average, it's a little bit nauseating. I don't know where to put my finger on that graph to say when the average occurred or what the average ought to be. This is something that I hope red oak deserves better than this, I guess is what I'm trying to say. Again, they're not at record highs yet, but the rate of price increase for red oaks, just like the other species, is very steep, just as it was steep in post Great Recession recovery. And keep in mind, we all know this, that this kind of rate of price increase is difficult, if at all possible, to pass along. As for you, higher prices mean you are loaning your customers a lot more money for the same lumber that you had been selling them all along. But given today's market where demand is actually increasing and recovery in supplies and inventories is necessary, the expanding market, higher prices could mean that you're going to be exposed much more with your customers with money. And with all the benefits of selling more volume at higher prices, you've got this greater financial risk. And even if your customers don't owe you more money, they could owe your other vendors much more money. So I'm curious if any of your customers have hit their credit limit with this current run up that we've had, or if any of your salespeople come to you and ask you to bump up the credit limit, or if you've reached out to your credit insurance provider and asked them to reevaluate any of your suppliers. So again, supply is a product of demand, and price movement are a result of the supply-demand relationship. With very few exceptions, every major hardwood lumber production item is experiencing price surges. Here we see cross ties or not, at least not yet, but cross ties prices didn't get beat up much before this market surge. The other items not advancing in price are board, road, and mat timbers. Again, that was the only market sector that did not recover on the second half of the year. So what is next? And I'll tell you, actually, what's next is already in process. First and foremost, the supply side of the market is responding to demand. It hadn't responded aggressively so far, not nearly as much as it needs to, but it is moving in the right direction. And if we extended the rate of sawmill production increase right now, how long would it take before it caught up where consumption was last year? Well, at this particular rate, it would take sometime in 2022. I do anticipate to see sawmill production increase more at a higher rate as we move into drier weather. Even if hardwood usage in 2021 is the same as last year, we saw earlier that there are depleted inventories and businesses need to replace those inventories. Problem with that is building inventories, sawmill has to produce more lumber is being consumed and the additional lumber for them to be able to get to those goals. Which brings me to another point. Who says the demand is going to be the same in 2021 as it was in 2020? Just like the US, China and other markets are recovering, need to restore inventories. You might have missed it while you were busy trying to keep your business going last year through everything that we went through. But US exports hardwood lumber to China actually increased last year 2% in volume, 2.6% in value. The two important things to consider about the China market this year, other than the inventory recovery, first, China's government extended the tariff exclusion to September 16th, 2021. Secondly, China's economy is still recovering and is still strengthening. One more thing to think about China that could happen, to monitor closely, is Russia's announcement of suspending log exports. So if Russia really does what it's advertised that it's going to do and halt log exports, then China's demand for US hardwood lumber and US hardwood logs should increase this year. This is something I'm really encouraged by. What this graph shows gives me a lot more confidence in business opportunities for US hardwoods going forward. The US population demographics are changing. This can and should elevate demand for key export markets as well as our domestic markets. What we're currently experiencing with housing and the economy may be something more than a recovery from COVID lockdowns, and frankly, I believe it is. In fact, we could be in the early stages of a very prolonged market growth expansion, maybe even the longest in history. According to US Census data, more than half the US population is 39 years old and younger. That was actually a startling statistic to me when I came across it. More than half of that group is 21 to 39 years old. They are of home buying age and they'll continue to buy homes for years to come. Furthermore, subsequent home purchases, they will be made. They're not going to buy one in their lifetime. Those houses will be larger, more expensive, just like we did. And with each home purchase, there's going to be some kind of purchase of furniture and fixtures that absolutely should include US hardwoods. When we look forward, when that millennial group begins to get to their peak of home buying, right behind them is another generation, almost equal in size, that will be of home buying age. So I want to come back to this graph. This time I want to look at the left side of it. I want to get an idea of the impact that the baby boomer generation had on housing.
Hey, how you doing?
The baby boomer generation, my generation, became of age in the mid to late 60s. There were some delays in home buying from the Vietnam War, also a weak economy in the early 70s. But as you can see, there was a critical mass of people that moved into the housing market, bought houses, and over a long period of time, the baby boomer generation fueled demand, fueled that housing market. This is the same sort of thing. This is Eastern US hardwood production. I sort of blocked out those same years that we talked about in housing to see housing's impact on US hardwood sawmill production and maybe baby boomers' impact on housing and US hardwood sawmill production. Now, I ask you to consider this. The millennial generation has a population of 85.7 million people. It's 19% larger than the baby boomer generation. Generation Z has a population of 83.5 million people. It's 16% larger than the baby boom generation. Both of these generations are going to increase in age and affluence and become home buyers. Each has a larger population than any generation before it, but together they could become the most dynamic consumer group in US history. It's certainly going to be the largest consumer group in US history. Took some liberty here. The black horizontal line that you see there is pegged at 1.1 million housing, single-family housing starts. That's what's been said to be static demand. If we apply the millennial generation's population to it, that elevates static demand to 1.3 million units. I can't tell you that that's an exact number. That's just playing with those numbers just to get an idea of what could happen. It's not a promise, in fact, not only how they're going to buy houses, are they going to do what the baby boomers did? We don't know that. There's nothing that's going to guarantee that they're going to buy home furnishings and the fittings and the fixtures made from US hardwoods, maybe not even from wood at all. That's certainly a problem for our industry. But what I can tell you with assurance is that this 169 million people make up both of these generations need someplace to live besides your basement. So what's next? Because we do have this massive need for housing and what appears to be an ongoing massive need for housing, I think there's opportunity for our business. The question is, how do we seize and take advantage of that opportunity? Well, I have my thoughts on that, and I'm sure you all have your thoughts on that. But I want to remind you that evidence has shown the U.S. market share for U.S. hardwood lumber does not grow organically. It's important to remember that a good market can mask that. So rather than relying on a market bump to temporarily boost our business, there should be something more definitive and lasting to draw consumers to the products that you make. And good for us, there is. We have this initiative. Development of this program started more than 2 years ago, as you learned earlier today. Once this program's launched, it has to have adequate funding to be effective and sustainable. Now, I want to be clear with you. I'm not an agent of this promotion group. We didn't talk about it beforehand. It's just an observation for me. My job isn't to tell you what you should do or shouldn't do as far as funding that group. My job is instead to provide you information. So what the information has shown, there are real market challenges for your business, but there's real market opportunities for your business too. So I'm going to close my session by simply saying this, that the Real American Hardwood Promotion Initiative is another very important opportunity to consider for your business. With that, I'm going to thank you for your time. If you have any questions, about this material, I'll be happy to try to answer. I don't see any questions. Tell you what we do know is what doing nothing gets us. I think we can look back and we can see market trends. We saw what happened when our furniture manufacturing particularly, moved offshore, and essentially doing nothing, it got us nothing, got us less than nothing. So I think that's where the position is in my mind. I feel like we need to do something because nothing wasn't working. I do think being able to provide information, give consumers good information to make choices is important. What that message is, I'm not that marketing person to say, but I don't know how much it'll help. I don't know how much it'll push the needle, but I do know what happens on the other side. Any other questions, comments? Yeah, I would say the first foremost thing is money. There was a lot of wealth that was sucked out just to be able to operate companies. That has to be restored. And over when we came out of the Great Recession, the recovery period, prices skyrocketed, very much like they are now. And essentially that money funded production, get back in the game again. I think that's in the process of happening now. Pine is attractive because stumpage is low, sales prices are high. There's opportunity for mills to cut pine. I anticipate that will evolve. The other is confidence. I think people are regaining some confidence in business. Again, make a little money first, seeing firmer activity. So those things I think had to be in place for this. As far as long-term, I'm surprised we didn't see more sawmills literally go out of business. And I guess PPP money probably kept some companies in the game that may not have otherwise made it through. After the Great Recession, we saw a fundamental shift down in the number of sawmill businesses. It took companies out. And prior to that, you'd have market ebbs and flows, and you'd see small mills come and go. But it was fairly stable. It was fairly static. We're sort of in a different time now. The red oak price graph to me just speaks volumes. I don't quite understand that yo-yo pricing up and down. Nobody wins. The buyer doesn't win. The seller sure doesn't win. I'm hopeful that maybe promotion can help flatten that out some too. So I don't know if I answered your question or not, but I think it's just, make a little money, gain some confidence, and we'll see that reengage.
You want to move that?
Yes. I'm sorry, I can't hear you.
I know there's a lot of moving pieces in supply and demand and pricing and all that stuff, but if you looked at your chart that showed the remodeling and new home construction, at the high level, you would expect that to just drive hardwood demand, but maybe China dropped in the meantime or exports dropped. Do you expect a lag in demand, later this year where hardwood production will take off and kind of meet that increased construction and remodeling demand?
That's what supply does. The only reason to have supply is to fulfill demand. I can't tell you when it'll get there, But that's the only job supply has is to satisfy demand. So I fully anticipate it to move in that direction. But keep in mind, supply comes from a lot of things. We're talking about U.S. hardwood sawmill production. There's also production around the world. And then there's non-wood products. There's certainly composite products. So there's competition from all sorts of things. It's not just us. We need to be there to get our share, try to make sure that we get our share. And yes, this is going to pull us along. There's no question. It's already pulling us along. And I expect it to continue to pull us along. But the thing that I'm not so certain of, it may pull us along, but we may not be hanging on to our full market share going forward. So when the dust kind of settles, when things do sort of level off, where will we be with our markets at that point? And again, it comes back in my mind to promotion. Let's talk to the consumer about our products.
I noticed a lot of your graphs had to do with housing starts. Do you think with the COVID-19 Act and them not foreclosing on homes, when they do start foreclosing, that's going to create a little bump?
Well, that's above my pay grade. I think what we're looking at is we've gone since 2007 building fewer houses than the market really needed. So we're at a deficit to start with. And now we've got this millennial generation that's well into home buying age, and they're buying houses. And if I was going to throw a comment about COVID in here, I would say COVID is actually stimulating housing demand simply out of the real large metropolitan markets. They're moving out of high density living. They want to be safe and live in their own home. We've sort of seen that. The other thing, people working from their home, that's kind of created some demand for home furnishings, home office things. I just don't know if we're going to get to a point where, if the government has been paying people's mortgage all along and they suddenly stop.
They
I
only
just
went there one night.
I feel more positive about housing than negative about it.
And they stayed there 2 or 3 nights to rest and relax.
Anything else?
Okay, good.
She went to a fountain.
Well, that's it. Thank you so much for your time.
And they went to the Savannah Bee Company, which we went to in Savannah. And